Hey everyone, Bren here from Goalorious. Today I'm super excited to be joined by Ruan from Seasonal Tokens. Thanks for taking the time to join me today.
It's a pleasure to be here. Thanks for having me.
Cool. So I would like to learn about seasonal tokens. I've checked out your website. You guys have a great introductory video kind of giving an overview on what the project is about. I think it's a great concept. Having the 4 tokens, definitely something unique, something I think my audience is definitely going to enjoy hearing about. So maybe we could start with maybe who you are in relation to the team, and then what this project is all about. Again, thank you for joining me today. I always love doing these interviews with people, so appreciate your time.
No problem at all. So yeah, so I founded the project. I came up with the idea, and I wrote the smart contracts for the tokens, and I implemented them and deployed them. And my background is that I started off as a physicist, and then I moved into I worked in cryptography, and then I moved into finance. So obviously, cryptocurrencies were something I was interested in as soon as they appeared. So I saw Bitcoin I saw it first in 2010, and I kind of really got interested in it in 2011, and started investing. And I was watching the Bitcoin price every day to see how my investment is doing, and can I quit my job yet? And
nice. Congrats. Yeah, I mean, I was watching Bitcoin in 2019 or something like that. So it's great that you were checking out early. So
absolutely, yeah. It was very good. It was very exciting every time you see the Bitcoin price rocket up, because what happened was that once every 4 years, the price of Bitcoin gets cut in half. The rate of production of Bitcoin gets cut in half. And these halving events happen, and then after that, the market has to adjust to the lower rate of production and the lower supply coming to the market. And what you see typically over the year or so after the halving happens is that the price of Bitcoin rises, and it's been very spectacular, and it's very exciting when that happens. But it's happened, I guess, 3 times now, and we've seen the whole price play out.
Cycle,
The cycle, and it goes up, it reaches a peak, and then it goes down. And it's very exciting when you know there's another halving coming up and the price is going to go up and you think, I'm going to make lots of money. But then what happens is that it gets to this period of euphoria, and then everybody is buying Bitcoin at the same time, and everybody's talking about it, and then the bubble bursts, and there's a bear market, basically. The price goes down for a year. So it goes up for a year, it goes down for about a year, and then it kind of stabilizes for the next 2 years, and then the cycle repeats. So
yeah, so it's great that you've been in the crypto space and had this like crypto, like the idea of like what's typical with our projects and things like that. I've talked to a lot of people that are like, hey, I've been in crypto for 6 months. Let's make a token or a project. And so it's great that you have this whole plethora of background, personal experience, and then obviously this project. Obviously, we've been talking about this cycle. Because I think seasonal tokens kind of has this concept of how do you make this a healthy project. And I think obviously the 4 token model is something very unique, and I think that's definitely interesting. So maybe we could jump. Sorry, I don't know if was there anything else you can say about your background, but it's great that you have a lot of experience, and then obviously you're very passionate about crypto, and that's where you kind of jumped into and you rattled off a bunch of things that you've done for the project. You found the project, and then you wrote the contract. That's a lot of things. So you're definitely very, in the know of everything going on. So that's great.
Absolutely, yeah. So, so this is kind of like both kind of part of my background and also how the idea for the project came. I was working in finance while I was holding Bitcoin, and I was watching the Bitcoin prices. But also, my job was basically to look at how stock prices move. So I detect patterns in equity prices and see how they can be traded for profit. So one of the things that I'd been kind of thinking while I was working in finance was what would be the best way for prices to behave for you to be able to profit from them by trading, and do so like in a reliable, predictable way, eliminating risk and kind of trying to guarantee as big a profit as you could get. And what I realized was that prices that predictably oscillate around each other would be very good for this, because then whichever, in this case, they're tokens, so you can take the more expensive tokens, sell them, or trade them rather for the cheaper tokens. Then those cheaper tokens will become more expensive later on, and then you can trade again, and you can keep doing this. So the number of tokens in your investment will be able to, you'll be able to make sure that it keeps increasing and never decreases, as long as you just say, oh, I'm going to always trade tokens for a greater number of tokens of a different type. And that's going to allow you to have an investment that keeps increasing in value. But while I was watching the Bitcoin price, and I saw that this pattern was playing out again and again, and that it was predictable, I realized that my own investment in Bitcoin was it was around 2019, I realized my own investment in Bitcoin is going to do very well at the end of 2020 and the beginning of 2021, for about a year after the halving, and then it's going to do very badly, because I've been through it so many times before. Lots of people have been through it, and I was thinking, oh, I'm going to lose more than half of my money, and the Bitcoin price is going to just go down, and what am I going to do? I could try to buy another coin, but then I'm not. Then I'm kind of gambling. I'm speculating on what's going to become popular in the future, because with Bitcoin, the reason that its price goes up is because the rate of production gets cut in half. And this is an obvious effect that's going to have an effect on the market, and it's obviously going to make the price rise. Whereas if you pick another token, another coin, and you try to invest in it, what you're really doing is you're saying, I think this is a promising project, and I think that it's going to become popular, and the public is going to do this. So you're kind of gambling on public opinion, and there's no way to know that public opinion is going to do that. It could be a very good project, but it may not happen that way. Whereas with Bitcoin, when you cut the rate of supply in half, that's guaranteed to produce a supply shock to the market, and that's guaranteed pretty much to make the price go up. So, but as I said, the price goes up for 1 year, then it goes down, and then it's kind of stable for 2 years. And what you want in an investment is something that keeps going up, rather than goes up, goes down, and then whatever. So you don't want to wait for 4 years for the next Bitcoin halving. So what I realized was that what you could do is, if you had another version of Bitcoin which was delayed by a year, so it had its halving 1 year after Bitcoin's halving, then its price would start to rise just as Bitcoin's price reached its peak. So you could hold Bitcoin until it reaches peak, trade it for this other coin, and then it would rise, and so on. So that was basically the initial idea of the seed of the idea, I guess, for the tokens. With 4 years in Bitcoin, if it goes up for 1 year and then doesn't go up for the other 3 years, what you would really want is 4 tokens to cover the whole period. You want to have, if you want to have an investment that's always going up, so you can always switch to another coin, then you'd want basically 4 tokens. So I initially tried to create another version of Bitcoin delayed by a year, just one coin, because it's a lot of there's a lot of effort that you have to put into making a proof of work coin like Bitcoin. You have to maintain a blockchain, you have to write a block explorer, you have to write your own wallet software, you have to do all of these. Another thing that you have to do is you have to defend against 51% attacks, which is that if you have a proof of work blockchain like Bitcoin, somebody else who has more computational power than you can rewind your blockchain and undo transactions and steal money. So what I really wanted, or what I realized, was that you can't actually do it with Bitcoin. You could, if you started off with another coin that had very little hash power, very small market cap, it just wouldn't be able to fulfill the function. You wouldn't be able to transfer your investment from Bitcoin to this and have it behave like Bitcoin does, because Bitcoin is a $500 billion at market cap, and this will be something with a market cap near zero. So what you can do, though, is you can have 4 tokens that all start off at a market cap of 0 and have them grow simultaneously, and then they can fulfill this function. You can switch from one to the other. And another thing about using tokens instead of coins, if they're running on the Ethereum network, is that you don't have to worry about 51% attacks, because the security is provided by the Ethereum network. So basically, I took the proof of work mining from Bitcoin and the halving from Bitcoin and this effect, and put 4 coins together that were staggered. They're separated by 9 months, and it takes 3 years. And the reason for this is that you have kind of tightly interlocked, overlapping bull markets, as it were. So the responses to the halvings, if they take a year to play out, it's going to be 9 months where you're pretty sure that the price is going to be rising over that period. And so you can stack these periods one after another into a time of 4 years. So that was essentially the idea for the tokens.
Yeah, and it makes a lot of sense. I love the idea of like the seasonal, obviously spring, summer, autumn, and winter. I have to remind myself what are the 4 seasons again. I think just conceptually, I think that makes a lot of sense for people to understand. I was thinking like, oh, was there any other names out there? But I was like, if you named like Alpha, Omega, or something like that, like people would get really confused. So naming it this, it totally makes sense. And obviously, when one goes down, I'm looking at your, which I think is a great graph, the relative seasonal token prices. When winter goes down, then the others will go up. So like they're all in relationship. It makes sense when you need to buy and sell. And then obviously, for example, like Bitcoin, you don't really know. You're not really, maybe you're just not keeping track. But having it to season based, having it for makes it really understandable on when you should do it. And you guys came up with your video, your 6-minute video came up with great analogies. They related to like farming and things like that. And I was like, oh, this makes a ton of sense. Real farming. Yeah. Because that makes sense. Some stuff goes in season, some stuff doesn't. I'm sure there's a lot of analogies and things like that. But I thought it's easy to understand and easy for people to know what to do. And I think, again, with your point about Bitcoin, and when not a lot of people are tracking it to the extent or have the knowledge that you have, but with something like this, all being included, and you guys have charts that's tracking obviously what's the current price, the historic relative price, what the plan is, and kind of how they relate to the other makes it a lot more easy to understand. It was my point, and I thought that's great. Another thing I wanted to mention is, I agree with your points. Is it's hard to control what other tokens are doing. You're kind of hoping that they do well. You said public opinion. Obviously, sometimes projects do well based off one person's opinion or not, which is just hard to, come up with a strategy from that. A lot of times it's simply random. Sometimes it's gambling. Essentially, that kind of concept. You're trying to eliminate that and come up with something that's healthy, not only for today, not only for next week, but for months and years to come. So that's kind of what interests me off this. And your website, your video outlines like what is the strategy. This is what you should be doing. This is what you should be expecting. Obviously, with some variables, but this is kind of what's happening. So I think that makes a lot of sense. So. And of course, on your website, literally the first thing that it tells you is, hey, this is the current season, right? This is what we're at right now. This is when to expect, this is what to expect and when to expect. This is when the next halving is, this is what the market cap is. So it's very transparent and you kind of understand. You're not just saying, hey, just buy this one simple token and then just sit on it forever. You're helping, people, with their strategy. And I think that, that's really great. So, like I said, very unique, very something that, really drew me to it. So, cool. I had a couple of questions right off the bat. Obviously, that was a quick overview of it. I thought that makes sense. Obviously, I'll put the link description for people to check it out yourself. But maybe you could give my viewers kind of like a current state of where you guys are now, like maybe when this all started, where you're at now, maybe where you plan to be. And again, if there was anything else you wanted to mention before we jump into that question, feel free to as well.
Absolutely, yeah. So we started it was the 5th of September, 2021. That was when we deployed the contracts to the Ethereum network and then mining started. So the tokens have been produced for about 10 months now, and a little bit more than that, maybe 10 and a half months. And 9 months after so when we started mining the tokens, Spring tokens were produced at the fastest rate. They were the token that was the easiest to mine, that produced the fastest. They cost the least energy and electricity and time to produce. And winter was the most expensive. And so you had these 4 token prices, with winter being the most expensive and spring being the cheapest and summer and autumn in between. And that was pretty stable for the first 9 months. And now with what's happened on the 5th of June, which was 9 months after the tokens were deployed, the rate of production of Spring was cut in half. So Spring was intended to be the cheapest token and then to become the most expensive token. So the idea is that if you have winter tokens, you could trade them for summer, autumn tokens, and then trade those for spring. And every time you make a trade of the more expensive tokens for the cheaper ones, the total number of tokens in your investment increases. And as long as you follow this rule, just always trade tokens for more tokens of a different type, you can guarantee you don't make a loss. So, well, measured in tokens, the price of dollars will go up and down. To be honest, we can't control the price in dollars. That depends on external variables like the popularity of the project and the state of the economy and interest rates and so on. So we have no attempt to control that over the short term. But what we do have more control over is the relative prices of the tokens. So we can guarantee that because Spring tokens are the cheapest to produce and because they're produced at the fastest rate and so on, that Spring is going to be the cheapest of the 4 tokens. And that was the way it was up until the 5th of June. And then after that, the rate of production of Spring was cut in half. And now because of what we see with Bitcoin, we can anticipate there's going to be a market reaction to that. And it just makes sense that when you cut the rate of production of a token in half, the price is going to have to increase in comparison to whatever is a fair measure. And the other 3 tokens are they're still in equilibrium with respect to each other. Like a winter token, how many winter tokens a summer token is worth, that hasn't changed. But what's happened now is that Spring is harder to produce. It's produced at half of the rate that it was, and that means there are half as many Spring tokens being sent onto the market every day or being supplied to the market, and that means that you can expect the price of Spring to rise. And from looking at what Bitcoin did, I had estimated that 9 months would be a good period of time to allow this price rise to play out. What's actually happened over the last 6 weeks is that the price of Spring has gone up a lot faster than I expected it to do. I thought it would be basically the end of the year when Spring would be at the price that it is relative to the others, because Spring has already overtaken summer and autumn.
And summer.
Spring is
winter's at the top. Yeah, so this is what I'm looking at. Winter's at the top. Spring took exactly as I said in June. It went a lot quicker than you probably expected. It could be the market. And then summer and autumn took like I said, like if you look at you compare it to the theoretical relative, summers goes down, which is what you would expect. And that's good to see. It's like this is what you guys expect. This is what you expect to see. It makes sense.
Yeah, it's absolutely happened like that, and so it could be. So the thing is, there are multiple factors affecting the price, and we don't know. One of the things that's true is that Spring is still the most plentiful token. It was produced at the fastest rate for the last 9 months, and there are more Spring tokens than any of the other tokens in the world. So that's going to be a factor that's going to be tending to keep the price of Spring low in comparison to the other tokens. But the other factors, for example, the current rate of production is going to push up the price of Spring because it's the cheapest, produced at the slowest rate of the 4. And the other factor is that traders who have other tokens, they know that their time is running out. If you have winter tokens or summer tokens or autumn tokens, then you know that the price of Spring is rising. You have a limited amount of time to trade your tokens for Spring. So you have traders trading their other tokens for Spring tokens, and that makes it rise faster as well. So it's not just the mining economics that's pushing this up, but also the rational behavior of investors as they seek to increase the total number of tokens in their investment. And that might be one of the reasons why it's happening faster than Bitcoin's price has risen after its halving. But it could also just be a fluctuation. It could be that this is just a temporary period of enthusiasm after the halving when we have a lot of attention and a lot of people thinking about it. And it's possible that the price of Spring will decrease and then rise more slowly over time. But I'm not sure. To be honest, this is the first time this has ever been done. It was, to a certain extent, an experiment. What we tried to do was to be as certain as possible that it was going to basically do what it was intended to do. We wanted to be pretty sure that winter would be the most expensive, Spring would be the cheapest, and then the Spring price would rise. But what we didn't know is how fast the market would react. We can't predict how investors are going to behave. So how fast the price of Spring rises and whether it stays high depends on the behavior of investors. And we didn't know what the investors were going to do. It's hard to predict that, but it seems that the investors have paid attention and they've traded tokens for Spring, and the price of Spring has risen very quickly. So what we're we've got 9 months, well, 8 months now until the summer halving happens, and I think that by the end of those 8 months, it will be very likely that Spring will be the most expensive token, and probably by a decent amount, because it now takes 10 hours to produce as many Spring tokens as the number of Summer tokens you would produce in 6 hours. Whereas previously it took 5 hours. Now the rate of production has been halved, so it now takes 10 hours. So Spring is now produced at the slowest rate, and it's the hardest token to obtain by mining. But it's still there are more Spring tokens in the world. So if investors who have Spring tokens decide to take profits because of the rise in price, they could push the price back down. That could have a depressing effect on the price and slow the price rise, well, yeah, I think that's basically the only thing that's pushing the price of Spring down in comparison to the other tokens. Everything else is pushing it up. So it seems to have worked kind of more successfully, more dramatically than I thought.
Yeah, like if you look at I guess March, April, like everything was kind of just maybe it's just the market, maybe people weren't buying or whatever. Everything was just kind of stagnant. But then now you're seeing the last 2 months things crossing each other,
absolutely,
things like that, which is exactly what your model expects and things like that. And so exactly what you're saying, like winter, it hasn't officially crossed anything yet, but potentially it could or whatever like that. So that's great. Like I said, you present the data, you're showing it off, you're making you're letting people know what it is, and then of course even on the homepage you're clearly stating this is when the next halving is, and letting people know so they have plenty of time to strategize and things like that. So I think that's great. Again, I'm always a person for transparency and helping people become better investors. I mean, it makes sense that you want people to be involved in your project. There's about over 800 holders, and you want them all to be educated and well aware of this. But cool. And then there's other things like we don't have to cover it today, but things like mining and stuff like that. You have lots of frequently asked questions on how to mine, etc., on things like software to use and things like. I'll put that link in the description in case that's relevant for everyone to check out. That's all there. And obviously, even obviously the benefits and stuff you've listed and we talked about as well. I know we're kind of talking about the timeline, and that's what's going on right now. It's summer, and obviously maybe not token related. Obviously, we kind of have to see what's up. Yeah. But what's coming up? Is there anything in the project that's coming up, or is it simply this is what it is? We just don't have anything else specifically coming. Obviously, I'm sure you guys are working on improvements and things like that, but maybe this is my I'm not trying to get spoilers or anything like that. I'm not trying to think, but if there's anything else that you want to mention specifically about what's coming up for this project, feel free to share it as well.
Absolutely, yeah. So one of the big things that's happening now is that we've already made a bridge of the tokens to the Polygon chain. So one of the problems the tokens were launched on Ethereum, and one of the reasons that I decided to do it on Ethereum, even knowing that the gas fees were going to be high, is that what's programmed, the mining schedule that's programmed into the tokens lasts for 200 years. So I'm pretty sure, or more confident at least, that the Ethereum blockchain is still going to be around in 200 years than I am that the other blockchains are going to be around.
It's fair. It's fair. Yeah. Yeah,
I mean, or at least some successor. If Ethereum were to die, somebody would, resurrect it and make a new version just to keep it going. Because the whole infrastructure there, the number of smart contracts, the economy is huge and it's very valuable. So I think that's likely to stay around. But that means that it has to essentially suffer the high gas costs when you're doing transactions on the Ethereum network. But what we can do is what we want. The high gas costs for mining aren't such a problem because mining the tokens is supposed to have a cost of production. They're not supposed to be cheap. So, but what we want is people who are trading the tokens to be able to do so without paying high transaction costs. So if you're doing swaps on Uniswap on the Ethereum network, you end up paying high gas fees. Whereas if you do the same transactions on Polygon, you pay almost nothing. It's 0 cents when you look at the gas costs. Well, that's rounded down to zero, of course. It's not exactly zero. Right. But basically, what we could do by allowing people to trade the tokens on Polygon for each other is we can eliminate friction, and we can. What we have is we have this this kind of rule of thumb for traders, which is always trade tokens for more tokens of a different type, and then the total number of tokens you have will keep increasing and will never go down. And that's good as long as you don't have any transaction costs. If you're paying very high gas fees, the number of tokens may increase, but each time you may be paying more in gas than you gain in the number of tokens. So by moving to Polygon and allowing the transactions to happen there, we can pretty much eliminate that because the costs are almost zero. So that means that we'll be able to essentially have people trading very small number of tokens. At the moment, if you want to do it on the Ethereum network, you're paying like a few dollars every time you trade, and that means if you only have a few dollars worth of tokens, then you've lost all your money when you would just pay. For,
I actually did like last year. I pulled my community. Was like, how big is your crypto portfolio? And like, or like how big is your crypto portfolio? And I was like, is it over 100,000? Is it over 20,000? Over 10,000? Is it over 1,000? Is it 100? Is it under 100? And like, you'd be surprised the high percentage. I think like 20-30% of it was like less than like $100. And then in my head, I was like, if you're buying, I mean, it's good to know. This is good information. But I was very like, and again, this is my sample size. It was maybe like 1,000 people, but I was very surprised about a lot of people, 20-30% of the people have portfolios buying less than $100. And I just thought of that because you said, if they're buying something, and especially, you think about the gas fees, think about, hopefully you're getting more token value than what you're paying in gas fees. So definitely something to keep in mind because it's a realistic, thing. So. Sorry, I interrupted you, but that was just something I was thinking about.
No, that's absolutely right. Yeah. What we don't want is people to do what we're to follow the trading strategy that we've made possible and lose money. That would be terrible. And Ethereum gas fees could cause that to happen. So
it's good that you're thinking about that stuff. Again, like that's your probably like number one, which is good. Like it seems like you guys are always thinking about thinking about how. I've definitely have bought projects before, and I was like, the gas fee is too high. Was this worth my time? Am I spending? You want them to obviously have a great experience, and you think about how you can improve on that versus like. You're not thinking about, let's add a fifth token. Like, that doesn't make any sense, right? You're thinking about how do we improve the experience. That's great. And then I'm looking at your page. I'll put the link in the description, which is like how to buy your tokens. This is currently the underpriced token, excluding spring, which is autumn. So you're teaching people how to be better investors, teaching people how they should have a strategy. Obviously through Uniswap, make sure you're grabbing the contract from the website, things like that. But my point is you're helping them a long way. And that's kind of your vision for moving further is, make it more easily accessible. So I think that's good. The last thing I just wanted to ask, sorry, I didn't know if you wanted to add anything there. I know I interrupted you, but obviously there's lots of ways to be involved in your project that we talked about. Obviously you could buy the tokens, you could obviously mining, farming, obviously, but I think one, I always tell my community this, if they're interested to join the community, I think you guys actually do a really good job on Twitter. I was just looking at your Twitter. You guys seem to post multiple times a day, not only about, hey, this is what's going on, this is the strategy, but also kind of talking. Hopefully you have someone else on your team. You're not helping with that. I know you worked on a lot of things, but they do a really good job of letting what's happening right now in the market, but also what's going on in the project. So shout outs to whoever's working on that. But I think that's something you guys should keep in mind as well.
Absolutely, yeah. So just one thing that I thought of mentioning there was that just as you were saying is that one of the things that if this whole you could trade tokens for more tokens and you can increase your holdings over time, the value of your investment will increase and it will go up even if the price of the tokens don't go up because you get more tokens over time. When this is happening, you're gaining economic value, and that has to come from somewhere. It's not just free. So one of the questions that is a legitimate question that people should be asking when they see a project like this that says, there is this way to gain more value and to acquire more wealth over time is like, where does it come from? It doesn't just come from a fancy idea. And so I think I should explain a little bit about where the economic value comes from. The oscillating prices are what make it possible to increase the number of tokens you hold over time. But the question is, in a sense, who's losing that value? Who's losing that money that you're getting? And what's really happening is that it's coming from the mining economy. you have these, you have the 4 tokens, and up until the spring halving, the miners were mining all the 4 tokens equally. Miners have computational power, and they can devote computational power to whichever token they want. And miners were mining all the 4 tokens equally because it was equally profitable to mine all 4 tokens. But then when the rate of production of Spring was cut in half, the price of Spring didn't instantly double. So that meant that it was suddenly not profitable to mine Spring anymore. So miners then, they had, because it was profitable to mine the remaining 3 tokens, suddenly it's only 75% is profitable to mine seasonal tokens overall, because one of the 4 options for mining has been cut off, and it's not as profitable. So what investors do, the role that they play, is that they make it profitable to mine Spring again. When investors, what they've done over the last month is they've started buying Spring, and they've pushed up the price of Spring, and now Spring is actually the most profitable token to mine. So the investors are helping the miners to adjust to the changes in the cost of production, and this is a contribution that the investors are providing to the economy. So every time you trade tokens for more tokens of a different type, you are helping the miners behave more efficiently, or produce tokens more efficiently. And the result of that is that the miners make more profit from doing this with the assistance of the investors, and also the investors they gain more tokens over time. So this is basically the partnership between miners and investors, and that's basically why the investors are not just getting free money for nothing. What they're doing is they're shifting their capital from one token to another, and they're doing this in a way that helps the miners to mine more efficiently. So the investors are using their money to provide a valuable service. It's like if you're an investor in stocks, or if you have money and you want to invest it, you can buy commodities, or you can buy assets that you think are going to go up in price. You can speculate on future prices, and that's one way to invest. Another way to invest is to try to use your money to provide a service. And one way to do this is to lend the money out. And basically, if you're lending money to somebody who's borrowing it, or if you're investing in a company, in both cases, you're giving money to other people and allowing them to do their work, and that's the service that you're providing. So this is kind of another way to provide a service with your money, but without giving control of it to somebody else and allowing them to spend it. What you do is instead you shift it from token to token, and that's something that the miners, the value, it helps them produce value more efficiently, and you can get compensated for that. So this is another way to invest, basically.
Yeah, I think that cyclical, I think, was the term that's thrown around. A lot of things that you mentioned, which I thought was really good, was on the website, you have obviously your mining section, which kind of outlines, again, all about transparency, all about what's happening. You're not trying to let them guess what's the most. It actually shows broken down by spring, summer, autumn, and winter, exactly what the rewards are, which one is the one, how the proportions are broken out, the tokens minted, obviously spring is the highest, but it also shows the rewards and the tokens. So my point is, these are great tools that you're not, I think other projects out there, if they're mining, they have to figure this out on their own or analyze their own data. You're presenting them hey, we're telling you what's the most profitable. We're telling you what's the best to do, not only for the miners, but also, like I said, the investors, to help if they want to raise the price and things like that. So I think that's super valuable. Just without even then obviously you can compare the mining pool stats to whatever your mining stats are, and then obviously things. So again, the way that it works visually, how it all works, I think is great. I think you guys are, going back to what I originally said, you guys are providing tools and graphs to make it easy so that only they can invest well and smartly, but also mine and do all the things that they want to do. So you're helping them with the strategy, which I think is great. And again, all this information I think is important. Again, I'll put the link in the description. But again, I think this is you want these holders to make sure that they have everything to make the best decision, because this is what overall is going to make the project healthy in the long run. So
absolutely, yeah. So I just want to say a little bit about that, which is that the reason that we want transparency, the reason that we're just showing everybody everything, is that we're not actually, in a sense, running the project. We're not a company. These tokens are like Bitcoin. They're produced by proof of work mining, so they're commodities. They're not securities. So the tokens aren't issued by us as promises. They're not redeemable for anything else, and there's no promise that can be broken. They're just something that you can put in energy, and you can mine them, and you can have them, and then you can trade them. So we're not actually in control. What we've done is we've created these tokens, and we believe they're valuable. We believe they're good investments, and so we're mining them, we're buying them, and we're trying to explain to people what we're doing so that other people can do the same thing.
Yeah, that makes sense. Like, yeah, you didn't say it, but like, there's no like huge roadmap that's like, oh, we're planning to do like these 30 different things that, you know, relies on our development team, our partnerships to do. It's like, hey, you guys have a roadmap, but it's all it's all based on these tokens. But it's like, you're not like, we're doing an NFT marketplace, we're doing all these things, not these like, promises. It's like, hey, this is the value of what it is. This is what's happening right now. This is the schedule that we're on, and it's really up to you know, the community, the holders to kind of you know, be a part of this whole entire ecosystem, which I think to me makes like a ton of sense, because again, I see all the time these projects that are like, here's 30 things that we plan to make in end of this year, stuff like that, and you know, majority of the time that never happens. You're not trying to, you know.
We're kind of the opposite of that, because with most tokens, what happens is that whoever creates tokens, they create a huge number of tokens, give them all to themselves, and then they run a business, basically selling these tokens and trying to stay profitable, have employees, and trying to and people who buy these tokens are giving money to people to run a business. And we're basically, that's not what's happening with us. If all of our team were to just disappear, it would still be the case that the tokens could be mined because the smart contracts are going to run, and they're going to run as long as Ethereum is around, right. And people will be able to mine the tokens and sell them. There'll still be an economy it's not a business that's run by us. It's an economy that's now existing. And but people who are investing in the tokens aren't kind of giving money to us to run a business, because what they're giving money to the miners who mine those tokens or who sold those tokens, and those miners aren't us. In fact, when we started off, it was like a few people. We had about 12 miners at the beginning, and now we don't know who's mining. We have no idea, because it's just people out there find the website, find the project, turn on their own miners.
That's what you want. You don't want to have them like bug you every day. What's coming up? What's coming up? It's like, this is the schedule. This is what's going to be happening. Your roadmap is literally like, okay, March 2023, summer halving, December 2023, autumn halving. Like this is what's happening. And then you guys go, like, they don't want to have to check your Twitter every time or message on It's like, it's a very different kind of project. And that's why I kind of was excited to talk about it with you today. So again, I'll put the link in the description, for you guys. I appreciate, the time. Obviously, like I said, for any project, that you guys are interested in, definitely follow them on all the socials. I'll put that there. I assume your community is very open to people that are asking questions.
Absolutely.
If their questions might be, what current season is it? A lot of these information's on the website, and the strategy of it is there. So I appreciate your time. I don't know if you want to anything last things that you want to say.
If anybody wants to learn more or get involved, you can join our Discord. Just go to our website and click on Discord at the top, and you'll be I'm on Discord. The whole team is there, and you can. We're going to have more initiatives coming up soon. One of the things that we're planning to do soon, we already had one of these, but we're going to make it into a weekly thing, is a price prediction project. Because what's interesting is we don't really know. This is the first time it's ever been done. We don't know what the prices of the tokens are going to do relative to each other. I thought it was going to take a long time for spring to get above autumn, for example, but it's already above autumn after a month and a half after the halving. Yeah. So we're going to have a price prediction contest where we're going to give like $20 in tokens to the best 5 predictors of the prices of each token.
That's cool. Yeah, I like that.
Yeah, just it'll keep interest in the project going, and it will give people a reason to pay attention and to stay involved. And also, because the 9 months is a very long time. Here's the problem with investing versus with crypto investing, people want to get rich quick. They want a token they can buy today that's going to go to the moon tomorrow. And the unfortunate reality is that it doesn't work that way. If you want an instant quick profit, you're going to have to gamble and accept the risk of a loss. So if you're going to be an investor and you're going to make money solidly over time, and it's going to grow reliably, and you're not going to have the risk of just losing all your money very quickly and making catastrophic losses, you have to have patience. So that's why essentially 9 months of time for the market to adjust is, we know that the market is going to adjust is going to respond over the course of 9 months to a cut in the supply by half. So if you have patience and you rely on these inevitable market forces, then you can make a solid profit because you know what's going to happen. You can predict what the prices are going to do over long periods. But what the price is going to do from day to day is just very hard to predict. Right. It depends on market factors that they're not under our control. So basically, yeah, people are going to have patience. So one of the things that is kind of a small challenge, I guess, is to keep people involved because the months are going to go by. It's not like the price, spring is going to go up tomorrow and then summer is going to overtake that the day after that. It's going to be a very slow process. And that's what's involved in investing. If you invest in a company in a company because you want to gain the dividends, you're going to have to wait a year until the company pays out its dividends, and that's the patience of being an investor who's investing in the economic value that's produced by the company. But if you are investing because you think the stock price is going to go up tomorrow, then you're basically gambling, and you have to accept the risk of loss. So this is a project basically for people who want a solid investment that's going to grow over time for reasons that you can be pretty sure are going to work out. And that means that it's going to require patience, and so we're going to be producing these initiatives to try to keep people involved and to try to keep it interesting, even though people are going to have to wait for a long time. For example, for summer to overtake spring, that's not going to happen until next year.
Right. No, I think that makes a ton of sense. Those are the type of people that you want. You don't want the people that are in one day, out the other. You want to provide value over that. Like I said, you're thinking about this, not just today, this week, next season, but there's many seasons to come. So I think that's great. And so again, I appreciate your time talking about not only Bitcoin, but this project, all the different tokens, and then kind of the future of this. So definitely going to let my community know about this. I appreciate this. It's very exciting for everything going on in the seasonal tokens world. And again, I thank you for your time. I know you're very busy, and I just can't wait to keep following along with this project for the long term. And best of luck to you. And again, like I said, I'll encourage my community and you guys if you guys are interested in this, join their Discord. Definitely do your research. But I appreciate the time. So
thank you so much for having me here. It's been great fun.
Cool. So thanks everyone for watching. Catch you guys next time.